According to Financial Times, the foreign exchange reserves of developing countries are resumed the growth after 1.5 years of decline. The reducing of reserves was against the background of capital flight and the growth of current amount of deficit and the fall of commodity prices. Only in China since June 2014 to March 2016, they decreased by 20%, foreign media reports. Investors from developed countries entered the developing bond markets in search of yield on the background of record low and negative interest rate in the US and Europe this year. Last week, the price of bonds, which are traded at a negative yield, reached $13.4 billion. According to investors, the attractiveness of riskier bonds of developing countries is not only connected with their higher yields, but also with an extremely loose of monetary policies of the major central banks of developed countries. The inflow of investments in emerging markets bonds in July reached a record $14.1 billion. According to Morgan Stanley, the aggregate reserves of 31 major developing countries are increased by 1% over the past 3 months. In US dollar terms, they increased by $100 billion since the beginning of the year.